Alright, this video will be about market maker buy and sell models, also known as MMXM, what MMXM is, and how to spot them. And we'll be pairing that with order flow in this video. So looking at this picture here, you can see you have a curve that slopes down and up. Usually this is the left side of the curve and this is the right side. On the left side of the curve, you can see these red lines, and essentially when price is dipping down into a key level, smart money, also known as the banks, they're buying as price is dipping down into a higher time frame key level. The reason why they buy as price is dipping, and usually you'll see pullbacks in here or consolidation areas, is because their orders are too big to put in one position. So that's why you get the schematic of an MMXM, also a pattern, but I don't like to call them patterns. On the right side of the curve here, you could see as it's going up, they're selling into prices going higher, profiting off of where they bought here. Small profit here, profit here, profit here, until you attack the original consolidation. And I'll show you what that is in the next slide. Once price hits its key level, it will hit a smart money reversal. And then here's where you usually get your 2022 mentorship. And you look for a breaker and a market structure shift in here. In this image here, you can see the red, that would be the original consolidation. The green box would be the smart money reversal. And the blue box would be the distribution phase. You could see price dipping lower, hitting a higher time frame key level here. With SMT, price shifts. This would be the market structure shift. And this is when you're on the right side of the curve. So you can expect your left side of the curve, PD arrays, to hold. And if you don't know what those are, I have a video on this YouTube channel on PD arrays. So smart money, as price is dipping down, they're buying it here, they're buying it here, and they're buying here. And then they use the final buy, which is the handshake, as they hit their key level. So price will shoot down to the key level, also taking out sell side. And this is where they do the exchange, where they say, okay, this is the lowest point we'll go. But you don't know that's the lowest point until you start seeing the shift off of the key level. And then price will run to the original consolidation. What you're looking at here is a 15-minute time frame, and you have a SIBI here. Price stabs into it here, and then eventually running for the draw, which was this fair value gap here. We're going to drop down into a 1 minute and look at the MMXM in here. So remember this black line and this black line. And here is that MMXM on the 1 minute. And I will admit this is not the cleanest, but this is an MMXM. So as you see, price hits the higher time frame SIBI, shifts, runs into the mitigation block here, and then starts running for sell side, eventually hitting sell side. Your order flow would be on the right side of the curve here, and you can see your order blocks are holding as price is dipping lower. This consolidation here would be the original consolidation. Price is going up, and all these pullbacks here, this down close candle and this down close candle, is them shorting. So all these down close candles are them essentially going short. Price is running against their orders here. So now they're net loss, and they're going to keep going net loss until they get to their key level, which was here. Also above that buy side. And then they start taking price down. And once they shift, it should stay under the shift, because this was their last point of selling, which was this down close candle here. So they're not going to take price back above that, which is how you get your breakaway gaps here. So this gap stayed open, pairing that with the balanced price range here. So that's just a few things you can stack on, but as you can see, price dips down and takes out the sell side. This is a really clean market maker sell model here, and as you can see, price hits a higher time frame key level, shifts here, and then this is where you look for your SIBIs to go short. And if you remembered, this was the last point of selling, so price will stay beneath that, which is why you have a breakaway gap here. And you compare that with the balanced price range, which is this fair value gap here, paired with that fair value gap. That is a balanced price range. So now you have your right side of the curve, left side, and your order block here. And as price makes these up close candles, their order blocks as price dips lower and do sell side. In this picture here, you can see the original consolidation, the smart money reversal, and then it distributing into sell side. Also, on the left side of the curve, you can extend your old fair value gaps into future price, trusting those as a inversion level. So inversion level 1, inversion level 2. So when price gets beneath those, they should hold, pairing that with your order blocks on the right side of the curve. You have points of liquidity here as price is going higher. And one thing I want to mention is down close candles, down close candle, down close candle. As price is going to your key levels up here, they're pulling back, going short. So when they really do the shift, they'll stay under these short positions here on the left side of the curve. What you can see in this picture is a higher time frame key level here, price hitting it, doing its shift, and then it leaves low resistance liquidity behind. So trusting price can go to the original consolidation in a hurry. Looking at the left side of the curve, you can see this inversion plus this order block here, which makes this a high probability trade to buy side. This red box will be the original consolidation. Higher time frame key level where it got hit. This will be the smart money reversal. So here's something you can go by to help you understand time frame alignment with MMXM. You can use your monthly to daily for MMXM. You can use your weekly to 4 hour, daily to 1 hour, 4 hour to 15 minute, 1 hour to 5 minute, 15 minute to 1 minute MMXM models. This is like something basic to use, and it is effective. Or you can blend time with your MMXM, and that's a whole nother video. I have a Discord that everyone can join down below in the description as well. And I'm honestly thinking about, well, I'm not thinking about it, but I am thinking about it. I have another Discord server. It's called The Cage, also Trade Wars. And in there, I'm going to be hosting a lot more events like trade comps, trade wars, etc., etc. You guys will see. But smash the comments if you guys want me to post those.